Welcome back, fellow investors. Today, I have a treat for you as I dive into the world of investment wisdom with none other than the renowned financial expert Jim Rickards. If you're looking for the best way to invest your hard-earned money in today's dynamic market, you've come to the right place. In this video, I'll uncover Jim's insights on the current investment landscape and discover the best strategies to make your money work for you. Diversification is the key for anyone looking to build a strong investment portfolio. It's a term you probably heard a lot, but the question is, do you really understand what it means and how it can impact your investments?
The first thing I say, diversification, the math and the science behind diversification and why it's a good strategy is very clear. There's not much debate about that. The problem is people don't understand what diversification means. They think if they have 50 stocks in 10 sectors, semiconductors, consumer non-durables, or whatever, they're diversified. And what I say to them is, you may have 50 stocks, but that's one asset class.
Diversification is at the heart of Jim's investment philosophy. When you hear about diversification, it means spreading your investments across different assets to reduce risk. It's like not putting all your eggs in one basket. But here's the catch. Many people think they're diversified just because they own a variety of stocks across different sectors. However, that's not true diversification. Jim revealed that the secret about the math and science behind diversification is grounded in correlation. Correlation measures how two assets move in relation to each other. When you have highly correlated assets, those assets tend to move in the same direction. So, even if you own different stocks in different sectors, if they're all highly correlated, they can still tank together in times of market stress. Jim Rickards explained the real meaning of diversification. Imagine this scenario. You invested in a group of 50 equities that were thoughtfully split among 10 different industries, like semiconductors. Many people would admire your efforts to diversify, but pay closer attention. According to Jim Rickards, the reality is that despite your 50 stocks, you're essentially in one single asset class, stocks. In times of market stress, stocks can become correlated, meaning they move together. So, even though you've diversified within the stock market, you haven't diversified across different types of assets. Now, this is where things get interesting. True diversification extends beyond the boundaries of a single asset class. It involves incorporating a mix of various asset classes that behave differently under various market conditions. Jim encourages people to think beyond stocks, consider bonds, real estate, commodities, and more. These asset classes can have different responses to economic shifts. When stocks waver, bonds might hold steady, or commodities could see gains, helping to balance out your portfolio's overall performance.
I'm not anti-stock market, but you got to pick the sectors and the stocks that will perform well, even in the kind of conditions we're talking about. And I would go back to energy, natural resources, agriculture. So, a Marathon, ExxonMobil, Chevron, ADM, Cargill, mining companies, and not just gold, yeah, but I recently invested in lithium.
According to Jim, natural resources are gaining significant attention in the investment world. His investment strategy extends beyond traditional assets, like stocks and bonds, to embrace the world's essential elements: energy, agriculture, and minerals. Jim Rickards has his tips on where to invest in natural resources. Tip number 1. Investing in energy natural resources. Jim Rickards advocates for diversification as a risk management tool. The energy and natural resources sector provides an opportunity to diversify beyond traditional asset classes. Unlike stocks and bonds, which can be influenced by market sentiment, this sector often operates independently from market fluctuations. This independence can serve as a potential cushion during times of market turbulence. Energy is the lifeblood of modern society. From powering your homes to fueling industries, energy is indispensable. And guess what? It's not going away anytime soon. The unbreakable demand for energy makes it a consistent player in the investment world. Now, when Jim Rickards talks about energy investments, it's not just about fossil fuels. The world is now living in the midst of an energy revolution. Renewable sources like solar, wind, and hydropower are gaining traction. This shift offers opportunities for sustainable investments and companies leading the charge in innovative technologies. Jim Rickards' forward-thinking strategies also consider the transition towards renewable energy. As the world shifts towards cleaner alternatives, certain resources, like lithium for batteries, are gaining prominence. By strategically investing in these resources, you can align your portfolio with the changing energy landscape. Tip number 2. Investing in agriculture. Jim Rickards has highlighted agriculture as an often overlooked but essential sector. As the world's population continues to grow, the demand for food and other agricultural products is steadily increasing. This fundamental need creates a built-in demand for agricultural output. Additionally, agriculture is relatively less affected by market volatility compared to some other industries, making it a potential hedge against economic uncertainties. Think about it. People need to eat, no matter the economic conditions. Unlike other industries that can experience cyclicality, the demand for food remains constant. This intrinsic demand offers a level of stability that many investors seek. One strategy that Jim Rickards emphasizes is taking a long-term view of investments. When it comes to agriculture, this resonates perfectly. The growth cycles of crops and the natural processes involved align well with the patient approach required for long-term gains. As the global population continues to grow and urbanization accelerates, the need for efficient and sustainable agriculture practices becomes paramount. This presents opportunities in areas such as precision farming, agricultural technology, and supply chain optimization. Jim Rickards often talks about the importance of diversification in an investment portfolio. Agriculture can be an effective tool in achieving this diversification. It's a distinct asset class that behaves differently from traditional stocks or bonds, making it an excellent way to balance risk. Tip number 3. Investing in mining companies. The future-oriented perspective of Jim Rickards includes how mining firms will influence society. Investing in mining firms that serve these industries can be wise because technological improvements necessitate rare elements and minerals. At the core of mining companies lies a fundamental activity, extracting valuable resources from the earth. These resources, like precious metals, minerals, and even essential elements for modern technologies, are integral to the global economy. Adding mining stocks to your portfolio introduces a layer of diversification that can perform independently of traditional financial markets.
Yeah, income producing real estate. I wouldn't get into commercial real estate, residential. The prices are, home prices are coming down a little more in some markets than others. But if it's income producing and it's solid and it's in a place like, someplace people want to be, like Austin or Phoenix or whatever. I mean, I know there's markets down a little bit right now, but it's like buying a 10-year bond. It's got steady monthly income and or certainly farmland. But income producing real estate, not commercial office buildings, should be a part of a diversified portfolio. Yes.
Tip number 4. Investing in income producing real estate. Jim Rickards' insight is that the current market climate presents opportunities. While home prices may have seen fluctuations in various markets, residential properties, especially those offering consistent rental income, can hold strong potential. Imagine owning an asset that generates a regular monthly income, similar to owning a 10-year bond. Jim's strategy revolves around the concept of income stability. With rental properties, you're not just relying on potential appreciation, you're benefiting from a consistent cash flow. Expanding beyond residential, Jim Rickards also acknowledges the potential of farmland as an income-producing asset. Agriculture remains a cornerstone of economies, and investing in farmland can offer consistent returns through lease agreements or crop production. The best kind of real estate to invest in can be determined using Jim's advice. Residential properties, especially those geared toward rentals, might be a more reliable option due to steady demand and the opportunity to earn rental revenue. In contrast, commercial office buildings may have their issues. Income-producing real estate provides a way to diversify your portfolio beyond traditional stocks and bonds. It's an asset class that can offer a different risk-return profile, enhancing the overall stability of your investments. And there you have it, fellow investors, a comprehensive journey through the world of diversification guided by the wisdom of investment expert Jim Rickards. As I wrap up this exploration, I'll summarize the key takeaways that make diversification an essential strategy for your investment success. You are building a safety net for your investments through diversification. By diversifying your investments across other asset classes, you lower the danger of having your assets significantly impacted by the volatility of a single market. As Jim Rickards suggests, this strategy strengthens your portfolio's resistance to market fluctuations. The solutions developed by Jim Rickards are created with the understanding that your investment journey is frequently a long-term undertaking. Diversification is a fundamental strategy that supports your long-term financial objectives rather than just being a short-term strategy. So whether you're a seasoned investor or just starting out, remember that diversification isn't just a buzzword. It's a proven strategy that stands the test of time. It's about spreading your investments wisely, aligning with your goals, and confidently navigating the financial world's unpredictable journey. If you found this exploration of diversification insightful, don't forget to like this video and subscribe for more enlightening investment perspectives.